Good afternoon, everybody. All right, let's jump into it. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same here, despite me trading that crazy dollar stock. I already forget what the symbol is. All right, let's hop on into it. If anybody's got those SoFi numbers, I'd love to see them. Looks like it's trading with a very muted reaction. I thought the Airbnb numbers looked decent. I guess it's coming back here a little bit, but they hit that pretty hard. $2 billion buyback and decent looking guidance and a small miss on like EPS and rev. I didn't think the AMD numbers were awful either, but I didn't read the guidance. I guess guidance is in line, kind of, at the lower end of the estimates, the range. Oh, it's adjusted gross margin. What's the problem here? Gotcha. Thank you. Oh, that's a solid EBITDA number for SoFi. Rev missed a little bit. And they raised guidance. I'm surprised the SoFi is not trading a lot better if they raise their guidance, even with the little miss there. Oh wait, no, I'm misreading that. Looks like that looks incredible actually. They crushed it across the board and raised guidance. Interesting. It seems like here initially some of these stocks are not reacting as well on earnings reports as we've seen at other points here during this earnings season. Yeah, Rich, for sure. I'm surprised this SoFi is not like $1 higher from where it's trading. All right, let's jump into it. Market here, we had a down day today. SPYs are down 0.75%. Qs are down 0.5%. IWM is pretty flat, down small. So not terrible. We gapped down today. I think we were looking for and kind of expecting a down day. Let's make this chart here a little bit bigger. Intraday price action for the market, once again, fairly sloppy. I'll go back to that. The daily chart, what we discussed in the morning meeting today, is a very similar game plan coming into today's trading session as what we were looking at for yesterday. Just the gap was a little bit bigger. So, yesterday we had a small gap down in a market that's extended to the upside, but bulls have been in control. Today we had a slightly larger gap down in a market that's still extended with bulls in control. So it's more or less the same game plan. It's a common gap to the downside. Common gaps tend to get filled, but at the same time it's hard to have a lot of conviction to come in and do heavy buying after only one rest day after such a big move, like Pat was alluding to in his morning note today. You usually need a couple days of cooling, kind of at a minimum, to let those moving averages catch up and see what the market can do from there. So gapping down this morning, looked like we were trading even down a little bit pre-market on the Pelosi Taiwan thing, and then that honestly really increased the volatility in today's trading session. But at the end of the day here, a little bit of an upside tail. I wouldn't overread that. It's a market here that's basically continuing to consolidate. And like I said in the morning meeting, I was not ready to jump in and be super bullish today. But the more that ADMA catches up to price action on the daily chart, the more bullish I'm going to begin to become. Why is Robinhood making an announcement right now when they have earnings tomorrow? Right? Earnings are tomorrow for Robinhood. Am I wrong on that? I don't. This is like the second time we've seen this earnings season where companies are making material announcements about like layoffs, like literally the day before their earnings report, and I don't even understand how that's legal. But anyway, not to get distracted. Market here basically kind of met expectations, and similar to yesterday, even though the market was a bit trickier, I felt that we were super on point with what to focus on for trades. I know for myself personally, the snap call out that I had this morning when the market opened, that we talked about in the morning meeting, combined with trading that wacky APDN. Just totally made my day. This APDN, I guess I can start with that. I usually don't trade these types of names, these types of stocks. I don't like dollar stocks. I don't like these wacky news names. I find that for every single time you get a move like what this APDN did, you could get yourself involved in some sort of pump and dump where you could just get totally trapped in it. This thing was totally crazy, even though it was only a dollar stock, so it was manageable, but totally crazy. This thing was halting like every couple of minutes. It seemed like almost the entirety of the day. But I got involved in it because of you guys. I think mainly from Josh, saying that it's kind of a low float type of stock, which means that it could have the ability to run, and that they had something related to monkeypox that came out positive. So I bought stock at like $1.40 something versus the opening low after the market opened. Dollar stock, so decent amount of tier size, not necessarily a massive amount of risk. And this thing just went totally bonkers. So, I mean, this was the trade of the day for me personally. I mean, this move was insane. I got out of this thing in front of $4. Was my final kind of sale up here. Traded it pretty actively. You can see these gaps are all halts. This thing was just kind of halting over and over and over and over again. But, whatever. It was kind of a good one-off trade. I'm sure within a couple days, I won't even remember this symbol. As a matter of fact, I'm sure within a couple of hours, I won't even be able to remember the symbol. So that was that. Probably the better, more realistic trade to be involved in today was the Snap call out. So I was thinking Snap and like Peloton as some names that could potentially run off Pinterest. So and Pinterest was on the list as something that was worth watching today. Not necessarily something that I wanted to trade. I mentioned $22 in the morning meeting as an important area, and I did eventually trade it kind of off of that $22 area and was able to make a few bucks for myself into this bounce. But Pins was nothing really to write home about. Snap was the better one. One signal for Snap was that it was trading green pre-market. Obviously, the whole market gapped down today. Snap was trading green pre-market. The flip side of it that I mentioned is this bear flag that it's making on the daily chart. As this ADMA on the daily chart catches up to this bearish consolidation, it just adds further weight to it. But I thought, if it's ever going to go, if it's ever going to be able to give a bounce, if there's any chance that this thing breaks this consolidation to the upside, it should be on the day when Pins is gapping up 20% or whatever was happening on that. So right away when this thing opened up, I called out a long versus the low. The 951 low had already been put in. I think you could have gotten like upper 950s as your price, so you didn't even really have to take 10 cents risk. If you wanted to, you could have given it to the low on like the daily chart, which is like this 935 or 940 or whatever. Or you could just keep it tight with the relative strength on the opening low. So I wouldn't describe it as an A+ trade, but in play as a secondary was showing relative strength, relative weakness on the daily chart, but showing relative strength on the small time frame and pre-market. So this just turned out to be, a really solid trade. And it's crazy to me that this thing stopped out at exactly $10.13 again on the upside. I kept saying that spot between like $9.90 and $10.13. $10.13 acted as resistance on the earnings day, intraday on the earnings day, on this day right here, on the 22nd. And then the high on the day after that was $10.13, and then I think, and then I guess that was it. It was just those 2 days. Now we have a third day in a row where the exact high to the penny is $10.13. I was disappointed that it couldn't break that area. I felt if it broke that area that we could get further continuation. I really needed momentum to do it though. A little bit of an initial pullback here is okay because this opening move was so big. But when this low right here broke at the bar at 10.10, then your odds of getting that real continuation through the 10.13 resistance, which I thought could give another leg to $10.50, maybe even higher than that, is just going to be not happening. It just kind of the momentum just comes out of play at that point. So that turned out to be a really good trade. Peloton, which I've already been involved in, was a solid winner for me. I think that this also moved, honestly, as a secondary to Pins. And it's interesting, it's actually traded better than Snap did, even though it's not a social media company, though it does rely a lot on subscribers and subscriber growth. This was just a solid one. Roblox, which I'm still not involved in, gave a solid opening run for a potential day 2 after running yesterday, just to kind of fail back down and give this a little bit of a topping tail. So that might need some time. Ooh, this GDX ended up failing, huh? I know we were looking at GDX in the morning meeting. Gave this insane opening move just to come down and totally fail. It was a crazy day today. It was a really crazy day. There was a lot of volatility, a lot of chop, but just this event with this Taiwan was just, I don't know. I was certainly feeling a little bit jumpy at a certain point. They grinded us lower. We had already read pre-market. One of you guys, I think it might have been Josh also, had posted that JP Morgan said that, provided there's no major event here and Nancy, lands her plane fine, that the market could stage a real big rally on that. And that's what happened here. This move that you're seeing here from 10:10 a.m. to 10:50 a.m. Was entirely on her being able to basically land her plane fine and there being no immediate results on that. And then I actually started to get nervous after this run. As we started to pull back here a little bit, it was just some of the warmongering language started making me really nervous. So I whacked TQQQ really heavy, but keeping it somewhat tight. And I was very quickly in the money on it, which helped. So I whacked a bunch of TQQQ, again, kind of uncomfortably heavily at first. Just because I just all of a sudden I don't know, not usually how I trade, right? I'm usually fairly systematic in my trading, but I just kind of had this very foreboding feeling as I was reading some of the news there, and I've had a really big P&L run, kind of being long, since fairly heavily long since mid-July and catching this big run, and I thought to myself, with where the daily chart is for these markets, I don't hate the idea of having some short exposure even to begin with. That combined with just the headlines that were coming through on that, this kind of foreboding feeling I had, I whacked a bunch of TQQQ, took off a very small amount of it when I got that first big downtick, but it was enough to get me break even because I was keeping it super tight. And then the market gave a whole nother leg up, and I got stopped out of it. And it just kind of is what it is. And then that rally eventually failed here in midday also. It just shows you how much chop there was, and we closed weakish. I don't want to overread this price action. You could easily say, hey, Derek, we got an upside tail today. We didn't close well. Is this a signal for lower price action? Maybe. But whenever we're looking at retracements, just keep in mind that concept retracement. It's like a relative term, right? Like if you're extended compared to something. So if you're retracing back to something, and that area where you look for a market to retrace back to, is usually this equilibrium zone. So, like I was saying to start off the meeting, the more this ADMA catches up through time and through price, the more bullish I actually become. So yeah, not a great looking daily candle here, but what does it mean to me? Does it mean that we might get a pullback to, where's the ADMA? 404 and change at this point. I guess 403.53 is where it is. That's not the end of the world to me after such a big run. If we get a few dollars worth of downside, and we could pull back further than that. We could easily retest $400, which is in that equilibrium zone, and then you want to see if the market actually pivots or not. And the big question, of course, is can this rally be sustained? As of right now, this is still a bear market rally. Bear market rallies are primarily produced by sentiment and positioning. They're primarily produced by short covering. That's exactly what this rally was in March. All this short covering. And the market got really extended to the upside. The short covering was done. And once the short covering was done, the market basically never looked back when it went back down from there. So, the big question, if you're trying to be bullish a little bit more longer term, is if this can actually turn into real buying coming into the market. And I still don't have that answer. But when I see a day like today, I still think, even though we didn't close well, I still think that the market held in pretty solidly overall. Which, market held in pretty solidly when you could make the argument that it had every reason to go down again today. Yet it didn't. So that, once again, is potentially telling for us. That's basically all I got. You know, this APDN just turned out to be a surprisingly big focus for me, and I can't believe how well I got paid in it. To be totally honest with you guys, I kind of crushed it, and I'll take it because it's not normally my my cup of tea, if you will, when it comes to placing trades. Sorry, just managing something here at the same time as I'm talking. Oh, this thing's running again after hours. That I'm not surprised to see. We see that happen with some of these low float names a lot. You can just, you know, see I was just very active in trading this. I had this big lunch meeting today. I just left a bunch of offers out, and they were just getting filled as this kind of market was moving. So yeah, pretty bonkers, and now it's running here again after hours. So that's all I got. SoFi just made new highs here after hours. I'm still surprised this thing's not higher. That's all I got. I got a very hard cutoff for 5 o'clock today. So if there's questions, happy to answer them as best as I can. Yeah, so I guess we're switching to a new virtual trading floor tomorrow. I've gotten a brief look at it last week. It looks pretty cool. I guess we'll see tomorrow. Hopefully it runs smooth. If it doesn't run smooth, I think they can revert us back to the old VTF here pretty quickly. For whatever reason, they love to use us as the guinea pigs. We were the first people to use this VTF when it was brand new, and now there's going to be some new adjustments, some new updates or whatever that holds the information better. I think it can potentially let Pat and I both share our screen at the same time if we want to. Not sure if we'll really ever use that functionality, but we'll see. We'll see how it works out. Should be cool. Oh, it lets me play music, which I know is a mixed thing. I feel like some of you guys hate that. Remember we briefly had that functionality with this one. I remember experimenting with it once at 8 o'clock at night, and I just started blasting Metallica through the VTF, and I guess people were still logged in and probably going about their business, and all of a sudden there was just Metallica blasted through their computer screens. A bunch of people came over and were like, what the heck? So I guess we could do that. We don't do that too much. We don't want to be annoying, but once in a while, maybe to wake you guys up, quick little 30-second blast of a song can be fun. So that's it. We'll see how it goes tomorrow. It's gonna be a learning process for me too. If you guys know me, you know I'm usually pretty bad when it comes to learning anything new, tech wise. And apparently, if you have follower muted user list, you're gonna have to redo that. And I didn't even know that following in a muted list was a thing. So again, that just shows you how solid I am with the technology. There we go with this SoFi starting to finally wake up a little bit. Surprised that initial reaction was so muted to those numbers. I thought those numbers were solid. All right, let me scroll back up here into the VTF because I think I missed a question or two. Yeah, Steve from Denver. Or Denver Steve, we are now. I know I answered it real quick in chat, but I can bring it up also. Yeah, so Roku, great 2-day move. This was on the list from yesterday. Hopefully some people caught it early yesterday, swung it. The easy move now on this thing is done, right? So what you can expect with some of these things is the previous support that it broke down from, which I would call that roughly the area between 73 and 77.50, can act as resistance. And we know how equilibrium works in the market, right? So this thing was extended to the downside because of its not so great earnings report. It snapped all the way back to the ADMA. This is where it gets a little bit more difficult. But if you're already in it from good prices, you know what to do. Just have your game plan in place for reward maximization and let it pay you or not. Your worst case scenario is it pulls into this equilibrium area like it did. It gives you a great move. It rolls all the way back down and fails. Your best case scenario is this thing works its way back up. At some point, it's going to have to give a higher low and a higher high to confirm a trend reversal. And next thing you know, you're knocking on the $100 resistance again. I will not be surprised at all to see Roku back at $100 in a relatively small time frame, provided that the market continues to hold up. If the market obviously gives a leg down or breaks down again and deteriorates, it's just going to make runs for this type of stock more difficult. But if the market's able to continue to hold in, I will not be surprised to be looking at Roku back in the 90s, back at $100. For the reasons that we kind of discussed, I think, in yesterday's afternoon meeting. But this is where it gets more tricky. This is where you don't want to enter, right? Like this $77 area is not where you want to be initiating your new long position in Roku, at least not from a technical perspective. If you're really big picture and you're going with my thesis, you think there's a buyout chance that this thing gets bought out at $125, then maybe it's worth it to come in and buy $77. But from a technical perspective, this just became a much more difficult spot to enter. You want to already be in it and just have a game plan in place for reward maximization. Next I'm seeing here is from my buddy Elliot. I took a trade in Shop at 10:45. Let's take a look. Shop is working its way slowly here back to this major $40 resistance. $40 is that really big spot. These last couple days, where are these highs these last couple days? 36.65 and yesterday is 37.42. So just kind of want to get the lay of the land of the daily chart. $40 is certainly your real big area on the daily chart that this needs to get above. So now that we know the daily chart, we can look at our small time frame. So you're looking at this thing at 10:45 today. So that's on this, gives us a little pullback to the 21 EMA and then kind of gives another leg higher. So this was like kind of a sloppy, grindy uptrend that this thing was in. For the break of 37.50. Okay. Yeah, you can see this 37.50 is like sloppy resistance. It's kind of yesterday's high. And here we got highs intraday today of 37.57, 37.56, 37.55, 37.51. So 37.50 area is what I would describe as kind of like sloppy resistance. We know it's an important zone for the stock. We can see that based on yesterday and how it was trading so far today. But it's not like you can feel comfortable saying 37.50 is my spot. I'm coming in and I'm buying it. It's a very clear flat line. It's not. You can see it's tailed through here a number of times. So it sometimes makes that a little bit of a difficult spot. So let's see. You got in at 37.48, anticipating the leg up, anticipating the break. I had a stop under the 10.45 candle with a target of 2R, 38.48. Okay. What's the low of the 10.45 candle? I think you got to use the pivot low here, to be honest, even though this works. I don't consider this to be, yeah, the volume didn't really pick up. The volume picked up on the second bar, so that's significant. The volume didn't pick up on this bar. I don't really consider this 10:45 a.m. bar to be like an ignition candle. So I feel like the real proper stop in this would actually be the pivot low and not just the low of the bar. But okay, let's continue to review the trade. After 10.50 candle, which was a Maribozu candle and broke the 37.50 level, I moved my stop under the 10.50 candle. Yeah, there's the volume there. But then I was stopped out and then watched the stock reach target without me. I know I didn't trade this properly, but can you tell me what would be the proper way to trade this type of trade? So I don't actually hate raising the stop to the low to where you did. I'm not going to say I love it either, but it's not something that I'm totally against, just because the volume on that bar is so big that it makes it significant. If that volume wasn't there, then I would really dislike raising your stop to that bar. But given that volume is I mean, it's the second biggest bar of the day outside of the opening candle, and we know the opening candle is inflated. So in reality, it's probably the biggest candle of the day. So because of that, I don't dislike raising that stop to that point, because if it gets below it, that everybody bought in that bar is out of the money, and that could lead to potentially lower price action. I prefer to use the pivot, and like I even said earlier, I don't even like your original stop. I want to use pivots here, unless it's a true ignition bar, unless there's real big volume confirmation. I don't want to use like just some bars low. I want to use like an actual pivot point. This spot right here, this is the spot where buyers took control from sellers. That's the spot that's important to me. So that would be my original stop. Now, the next thing I would be looking to do if I was in your trade is, it looks like it's a big enough move, and I'm just eyeballing here. It obviously depends a little bit on your price. This looks like it's a big enough move where even if you were using my wider stop, you could get your risk covered. So that's great. And if you got your risk covered versus this stop, it means that you really don't need to be aggressive on raising your stop, right? You can feel comfortable of, hey, I can give this thing real breathing room. I like the company. I like what the daily chart's doing. I like what it's done since the earnings report. I can give this thing some real breathing room in it, and my risk is totally covered, and I can kind of rest easy. Or, depending on your tier size, you could say to yourself, you know what, I'm going to raise a little bit here just to lock in the money, because I know it shouldn't really be able to negate this Maribozu with this volume. All those people will become out of the money. I want to lock in a little bit extra. So I'm going to raise my stop on some of my position and leave a larger percentage of my position as my original out until I can get a true pivot point, which for me, when this new high breaks at this point in time of the day, you could raise your stop to this actual pivot here. So that's how I would trade it. I think that raising your stop to this point, again, while I don't hate it and you could do it, I really don't love the idea of doing it for 100% of your position. It's just a little bit too tight. I just kind of want to keep that pivot intact. The flip side of the argument that you could make here is, well, I don't feel like I have the market on my side. The market's very sloppy, blah, blah, blah. So I just really want to lock in the money. And that's fine. But if you're saying to yourself, man, I really want to lock in this money and, you know, get my risk off the table and keep this as tight as possible, then you can't be upset when it gives the run after you. And I was talking to somebody else through email who emailed me and, you know, about, reward maximization and kind of missing a further move. Just realize, so I game plan for greed at a certain point, right? That's my approach. When I've got my risk covered on things and I'm in that win-win situation, my personal approach is that I go kind of max greed. I implement trailing strategies, and I really try to let things run as much as possible. But I'm not here to say that my way is the only way. You know, it's like, I know we've talked about this, right? Like that famous Bruce Lee kind of video that I'm sure everybody's seen, where he's talking about martial arts, but, you know, he's basically trying to say that there is no, like, you know, people, especially back in the day, used to compare, like, what's better, like Kung Fu or Kempo or Taekwondo or, you know, Muay Thai and kind of all that. And Bruce Lee came in and he was revolutionary because he said, the way is no way. And you should take what works for you and for your body type from Taekwondo and apply it, and from Muay Thai and apply it, and from Kung Fu and apply it, and from Wing Chun and apply it. That's always been my approach to markets. So the thing that I would say to anyone who is looking after the fact and they missed a move is, well, were you following what your trading edge is? Were you following what breeds you consistent profitability? Were you following your game plan? And if the answer to all that is yes, then you can't be upset when you miss a big move, because you follow, that's your game plan, that's your edge, that's how you make money. And you can never let the what ifs get in your head of that. Now, with that said, it's always a good idea to take a half step back on your trading approach and say, hey, are there any tweaks I can do to refine this to make it better? And maybe the answer to that is hey, I'm better off taking my scalp type trades and getting out early and not giving reward back in a highly volatile bear market like we're in. This has been a better edge for me than trying to, you know, hold for bigger moves. The volatility ends up stopping me out, or, you know, keeping positions overnight because the swing trades are difficult. I keep the longs overnight and then they, you know, move against me and I end up giving back a lot more profit. I'm better in this market environment, just kind of scalping and booking profits earlier. If that's the argument that anybody wants to make, I support you and follow it. For me, that's not my personal approach. I'm looking for further reward maximization, and you guys all know what I'm trying to do, and you can implement that as well, and that's what works for me. But know what works for you. So I hope that feedback helps, Elliot. Cool. What do I got next on here? VTF updates we discussed. Thoughts on the Meta Daily? Sure. It's still in this slop. Another inside day today. You could take this inside day in either direction. You know, if you had some real market weakness, an inside day and down in meta could be the catalyst that leads to a break of 155 that could be a solid trade, a solid short. The flip side of that is it's continuously holding support. The market, we know, is a little bit extended to the upside, but has been kind of short-term, medium-term bullish. So, you know, that's an up move. So you're fighting some things here, and I personally think, and to me this matters, I think if you're shorting Facebook that the fundamentals are against you at these prices. And for me, that's, you know, I'm a technical trader, but I'm a technical trader who looks at fundamentals for bias. Because having, for me, having a fundamental bias in the market, I think has helped me it's helped me really be heavy and greedy and put heavy risk on in the right times and right spots for a lot of stocks. And the flip side is that, you know, I sometimes don't have the same degree of confidence on certain trades. Like every time I go long AMC, I'm like, oh my god, I hate this company, but it's making me money, so I'm just gonna close my eyes and like let it continue to pay me. That's kind of how I would feel shorting Facebook at this area. Like the technicals don't look great. It's daily chart relatively weak. It's below that 8 and 21 EMA, which are still declining. But again, the flip side is that your market's a little bit stronger. I think it's fundamentally cheap, and it's right in front of support. So I see a two-way trade here, to be honest. I don't know how this thing's going to break. I think you could take this inside day in either direction. I normally don't like an inside day and up into moving averages. You guys know that. But if the market is continuing to hold in like it's been and this starts to show some strength and break up, then, you know, you could be looking at this thing working its way back towards 175 bucks. So that's meta. Cool shop we did. Sure. So Jackie's asking me about pins. So pins may have been tricky for some people today because it broke 22 and kind of came back up. Low of the day is 21.90. So what I'm looking at these levels. So first of all, you have to have a game plan in place. So a lot of what I'm doing is I'm recognizing the importance of $22, but I'm not necessarily like buying in front of 22 and putting a stop at 21.99 if that makes sense. Because I recognize that the level can be loose. I also recognize that the stock wasn't really trading well into 22 bucks. You know, it was kind of weak from the opening print. It was just in this heavier downside grind. It seemed like people were liquidating. But I know that $22 is an important area. So generally what I'm going to do is one of a couple of things. But one of those things is look for a smaller time frame signal with the knowledge that $22 is really important. So maybe that smaller time frame signal is I'm getting like a hammer candlestick at 22.25 or something. And maybe I'm not even giving it all the way down to 22, and I'm just recognizing 22 is important on the daily chart. I got a small time frame setup here. I'm just going to trade the small time frame setup. Or maybe you will try to build in versus 22, but the problem with doing that is that, you know, it doesn't have to hold 22 to the penny, right? It could shoot to 21.90 like it did, and then snap back. It could shoot to 21.70 and then snap back. And even if you look like these highs, like this high is 21.99, but this high here is 21.67. So that makes it a little bit, again, potentially loose. So the small time frame entry is a great one. Or a lot of times what I'll do, which is what I did today, is I'll just start really small. I know I'm buying on the way down, which I generally don't like to do. I know I'm buying on the way down. But I'm going to be just kind of starting small because I know it's an important area, and I'll call it a filler position, and then I'm going to be looking to get heavier if I get any type of signal. So that's kind of what I did. I think my first purchase was actually on this bar at 22.50. And then I didn't call it out because I just bought a little feeler here. There was no reason technically for anybody to be buying this at this point. I called it out when this hammer came in right here. And then I added. because this hammer was coming in. It's in the equilibrium zone. Like, that's why I'm starting with the feeler, and then I'm kind of adding as this hammer comes in. That failed. It's still above 22 bucks. That itself fails. So it depends on your sizing and what your game plan was. You know, either you're getting stopped out of everything here because this was the specifics of your trade, and $22 daily support is like a layer of probability, and fine, it just didn't bounce well enough probably to even cover your risk and you're getting stopped out, or you are giving it to the $22 area because you're small, or a combination of both, where you have that feeler like I'm describing. You get this is a signal to get heavier. Your signal to get heavier fails, but you're keeping your feeler on because you're kind of continuing to watch it. That's a lot of what I do, is what I just described. Having that feeler, looking for the signal to get heavier. Maybe I get stopped out of it. I'm back on the feeler, and I'm looking for kind of another signal there. This thing did not trade well. They got down in the $22 area, snapped through it, came back up. I don't think it ever closed below it, right? What's the low of the close here? Bar close is at 22.06. You never even got a 5-minute bar that closed below $22 today. But then it gives you this inside 5 and up after that snap through with no close below. I kind of like that at a really important daily level. So that was your next trade if you wanted to take it. And I don't consider these to be A+ trades at all. Even this pullback was a little bit more than I wanted to. And if you're watching the price action just wasn't really trading right. But this one gave a little bit of a bounce where I was selling stock at 22 in front of 22.50. I had another offer in front of 22.75 that never got filled. I was able to sell some in front of 22.50, and it pulled back. I also, and maybe this isn't a good thing, but you know, just in the interest of being fully honest and having full disclosure with you guys, I held a little bit of pins into the report. And this might not be the right thing to do. It's exactly what I'm saying, but I'm just telling you and being honest about what I did do. I'm leaning a little bit on the profit cushion that I have from how big the gap was, to be honest, with that feeler and with being a little bit loose on kind of the transaction. But again, the general gist of it is, depending on what's appropriate for you, your account size, your risk, your trading approach, your time frame, you could be starting with that feeler. What I like to do, start with that feeler, look for the signal to get heavier. Have this once you're heavy, you've got to have that stop loss in very specifically and know what your risk is. For me, with my account size and my trading and my P&L swings, and I'm not advocating this as something that traders should do, and as a matter of fact, I will advocate that this is something that new traders should not do. I will sometimes take those feelers with no stop loss, because I know, for me personally, that if I held a feeler from $22.50 down to $18, it's not going to be the end of the world for me. And for someone else, you know, having, you know, a few hundred shares or 400 shares and holding it, you know, $4 against them might be a very big deal for their personal P&L swings or account size or, you know, kind of whatever it is. So that's the broad thought process there, Jackie. I hope it helps. Cool. All right. Anybody else have anything, or shall we wrap it up a little bit early? Like I said, I got a 5 p.m. cutoff today, so it helps me if I can end a couple minutes early. All right. So I'll do that then. It's 10 to 5. Okay. So again, a second day in a row where the indice price action was kind of difficult and choppy, but a second day in a row where we found, I think, some real good diamonds in the rough of trades if you were kind of able to pick your spots and be involved in them. Some of those growth stocks traded really well early on and paid if you kind of took those executions there. So I think that's about as good of a job as a team as you possibly can do on these types of trading sessions that are a little bit more hands-off, a little bit trickier. We need to be a little bit patient, but finding the right areas for, you know, good trade setups where there's relative strength, where there's volume, where there's something in play. So keep up the great work, everybody. I will see you all tomorrow. Ramon, just ask the question tomorrow, if that's cool. Just ask it in tomorrow's afternoon meeting. I'll be happy to get into it.